and welcome to Earnings Central. I'm Ritu Singh. Now, State Bank of India beat street estimates for the second quarter to post an 8% rise in profits at 14,330 crore rupees on a standalone basis. Its core income, or the net interest income for the quarter, rose 12% to 39,500 crore rupees. Other income also rose by 21.6%, but the bank's operating profit fell by about 8% year-on-year. Its asset quality improved, with gross NPA coming in at 2.55% and net NPA at 0.64% for the quarter. It also reported lower gross slippages quarter-on-quarter at 4,081 crores, with fresh slippages at 3,381 crores. The bank's gross advances grew by 12.4% year-on-year and deposits by close to 12%. Joining me now to discuss these second quarter earnings is the man of the moment, Dinesh Khara, the chairman of State Bank of India. Mr. Khara, thank you very much for your time here on CNBC-TV18. We saw a standalone profit growth of 8% during the quarter, but that operating profit decline, what was the reason for that? Where have costs gone up?
Thanks, Ritu, first of all, for having me on your channel. Well, when it comes to the profit dynamics, I would like to mention that in this quarter we have made some one-off provisions, and those provisions are essentially coming from the employee-related provisions, because as you are aware that the wage negotiation is going on, and we expect the settlement to happen in this financial year itself. And with that in mind, we have scaled up our provisions, which we are making provisions at the rate of 10% from November onwards, but now we have scaled it up to about 14%, and that actually took up about 3,900 odd crores. So that is one of the reasons why you would probably see this kind of a behavior. And in addition to that, there are some other one-offs also, which are essentially relating to the MTM write-backs. Last quarter we had about, I think we are, in terms of write-back, we are just about 200 crore this quarter, as compared to about 2,400 odd crores in the last, YOY basis. So that is other reasons why you get to see this kind of a behavior as far as the profit is concerned.
Your advances growth was about 12.4% for the quarter, and the second half is typically stronger. So what will that mean in terms of credit growth for the full year? What's in the pipeline? Where are you seeing demand?
See, when it comes to the credit growth, we have seen decent growth in retail, we have seen decent growth in SME, agriculture. Only in the corporate we have seen growth of 6.61%, and also in the international book has grown about 8%. I expect international book to grow only about 8% or so, but when it comes to the corporate, I expect that going forward we should see better traction, because we have already started seeing better availment of the term loan limits which have been sanctioned. It has improved by about 100 basis points. And also when it comes to the availment of the working capital also, even that has also seen an improvement. And we have got, as far as the pending availment limits are concerned, there as high as about 1.4 trillion, and almost about 3.4 trillion are the projects in pipeline which are under appraisal, sanctioning process, etc. So I think as the situation, as the time moves forward, we should be in a position to see better growth even in the corporate book. But I will stick to the advice in terms of the loan book growth. We expect that our loan book should grow in the range of 12 to 14%, and that is a kind of the number which I would expect. Though of course this is a busy season now, and now we will get to see some better growth even in our retail loan book also. So I think I expect that 14% is something which we should see going forward.
All right, 14% credit growth for the year. Mr. Khara, margins have come down very slightly in the quarter to 3.29%. In the current interest rate regime environment, where do you see your margins stabilizing, and is there levers for an expansion from these levels?
I think as far as the margins are concerned, part of the increase in the repricing of deposit has already got addressed, and maybe expansion may not be possible. Maybe compression, maybe another 3 to 5 basis point compression could be there, but it should stay at that level.
All right. Your slippages have been coming down for the last 3 quarters, but this 831 crores that has come in Q2, where is that from? And if you could give us an outlook for the full year.
Normally these slippages are from agri, from SME and some bit of it from the retail also. But I would like to mention that out of this 3,800 odd crore worth of slippages which we have seen as on 30th September, we have already pulled back almost 4,200 crore in the intervening period till now. So I think this is an ongoing phenomena. But I mean, our ability to reach out to the customer really help us in ensuring that we pull back the slippages and we contain the slippages too.
Okay. Your restructured and SME books have come down quarter on quarter. What are the trends you're seeing there? Any sort of concern emerging, or are you adequately provided?
No, we are actually more than adequately provided as far as that book is concerned. The behavior is much better than what we expected, and but nevertheless we have not really tweaked with the provisions which we are already holding for this particular book.
Earlier in the press conference, you did say very clearly that there is no concern on unsecured retail lending as far as SBI is concerned. But the larger commentary, especially from the regulator themselves, is coming that banks should be cautious on this front, and Civil, etc., saying that sub 50,000 rupee loans are seeing early signs of a potential risk build-up. What is your sense? Where is this stress coming from? And for SBI itself, are you looking to tighten your underwriting standards?
No, we don't have, first of all, when it comes to underwriting, we do have some unsecured loans where the outstanding is about 50,000 or less than 50,000. But we have not sanctioned loans at that kind of a level. This is when they start paying off, and then the balances which are left out, these are such kind of loans. Our unsecured loan book is to the tune of about 3.2 trillion, and our gross NPA in the unsecured book is as low as 0.69%. And also when it comes to the customer selection, we have offered these unsecured loans to our corporate salary package customers, and they are primarily either the government employees, state government employees, military, paramilitary forces, army, or for that matter, the state government or the public sector entities. Almost about 94% of the book is like that. Just about 6% of the book is to the well-rated corporates. They can be termed as blue chip also. So that is the reason why we don't have any challenge. But yes, of course, RBI Governor has expressed some concerns, but that could be for the industry in general, and that too for people who are entertaining such requests from NTBs where they don't have a visibility of the customer behavior. But as far as we are concerned, we don't envisage any challenge in this book.
Before we let you go, a quick word on recoveries. You've done about 7,700 crores in the first half. What should we expect for the remaining half of the year?
Maybe a little better. Almost about 8,000 to 9,000 crores is something which we are expecting in the second half.
All right, Mr. Khara, always a pleasure speaking to you. Thank you very much for your time here on CNBC-TV18.
Thanks a lot. To all the very best. Thank you.